Hello guys, I think let's wait and see if we are live here. Okay, I think it seems that we are live as far as I know. This is okay, I think we are live. Okay, so okay guys, so this particular stream or video will be for the stock selection method, how I select the stocks for an entire week. Okay, I keep them like this in a particular watch list. I sit down in weekend and I spend few hours and I create a watch list for the entire week, and throughout the week every day I have the alerts set over here, and every day I don't have to sit entire day in market. I just have to do my stuff, and when my alert hits I just have to execute. Monday to Friday is all about execution, and weekends is all about analysis and finding the proper setups. So that is what we are going to do today. Like, I generally do this for few hours, but I am not going to sit and stream this for hours, but I'll show you how I do, and I'm going to show you how I'll be doing for some stocks, few names, and then probably after that I'll end the stream and I'll continue my work, because I don't want to make this stream or video huge. Okay, it won't make sense. So the purpose of this video is to show you my stock selection method. So what I've decided, I have few methods of stock selection. So the first one is where I see the EPS growth. Okay, earnings per share growth, EPS growth along with sales growth. Okay, so I'll be filtering it in MarketSmith. It's a tool, and I'll filter it where EPS growth is greater than 40%. Okay, so EPS grade for the last quarter, that is greater than 40%, and sales growth are greater than, let's say, 30%. Okay, so we have to really, like, why this? Okay, it's simple guys. The stocks that I trade are momentum based stocks. They are growth based stocks. Okay, growth, that's the key point. Growth based stock, and these stocks tend to run like anything. They multiply like one, double, triple, uh, pretty easily. So what is the boosting factor? Like, why it happens? You need to find the reason. Key, why the stock runs like this. See, this stock has been running, look at this. It has never once come below 200 moving average. Why stock runs like this? Why? Okay, from 27. Okay, now it is in 240. That is 10 times, guys. 27 to 240 is almost 9-10 times. Okay, and why it happens? There is a reason. That is because it is a growth stock, and it has been performing really well with its earnings. Okay, so the institutions will put their money only where there is earning. Okay, there is earnings, and hence this kind of moves, because these are growing companies. They are having great earnings. Okay, their earnings are great, they are growing, they are expanding. Those kind of companies we will be trading. Okay, that's why I say growth based trading, growth momentum based trading. That is what I do. So for that we look for this particular EPS growth. So if I, for example, if I just take in case this CG Power, right, let me just show you it, if I'm not sure if it is here. CG Power, by the way, you guys can use any tool. There is screener.in, you can use that tool also if you don't have this tool. So if you see here, let me check. Yeah, so this is earnings and sales, right? Look at this growth, the triple digit. Okay, it's triple digit, and all I'm looking for is greater than 40%, and here it is 270%. It has been growing like anything, quarter after quarter. The earnings are really growing. See, even last quarter it has been 155%, and as you can see, even sales growth is also happening. So what we need to see is earnings are growing along with sales as well, because if only earnings are growing but sales are not growing, it means that it is not organic. Earnings can be increased by cost cutting. Yeah, right, cost cutting, layoff, those kind of thing can show that okay, EPS earnings is has improved, but not through sales, right? What we want is the product to be whatever this company is doing. I don't know what this company is doing. Whatever it is doing, it should show in sales. Its sales should be growing, and along with it, its EPS should grow, earnings per share. Yeah, that's earnings. So these kind of stocks we are looking for, because they're growth oriented stocks, and institutions want to get into this kind of stock, okay, which shows earnings. And when institutions try to get in this kind of stocks, the stock will rise. So this, in this case, tenfold, 10 times it has risen, 10 times it has risen. But do we need to catch the whole 10 times? That is 1000%. No, I don't want to catch 1000%. I want to catch these kind of moves. So if you see here, this is a base. After the base, there is a contraction in price. Okay, there is a price contraction in price. I can just simply buy here. Okay, I can simply buy here, and let's see how much I could have. Let's say this red color is 21-day EMA, and let's say I would have sold it when it closed below the 21-day EMA, right? That's 54%. 54% in 66, 2 months. 54%, guys. Okay, that's huge. 54% from 1000% move, and it will give you many bases along its move. You will find that the stock moves up, creates a base, moves up, creates a base, so you can enter multiple times. It's not necessary that you are going to buy here and you want to hold. If you can do that, then go ahead, why not? But I like to move my money from one stock to the other, which is showing momentum and which is ready to go, because I don't want to sit through this kind of phase where it creates a base forming. So here also, if you see here, we had a great opportunity over here. Okay, if I had taken here, probably I would have out at this point. Probably I would have been out. Okay, and I don't want to sit through this kind of phase. This is a basing phase. This is for 3 months. In these 3 months, I can move this money somewhere out, and I can compound like anything. Okay, so that's the point. What I'm trying to explain, that we need not catch the entire move. We just have to catch a quick 40-50% move, take our money, put that money along with our capital. Now it's compounded, and combine that and put it in another stock which is ready to go. Yeah, so that is the point. Yeah, now here, as you can see, it is forming a base, right? It has formed a base. Let's say this is a base, this particular thing is a handle, and I'm waiting to get a breakout on this one. Okay, so I haven't shown you the screener. I know I'll show you, but let me set the alert. Okay, that is important for me. I hope videos is going on, yeah, properly. Yeah, it's all good. Okay, so let's go back to our selection criteria. So what I've done here is I've taken filter, and so I'll show you the filter. Okay, basically what I'm trying to get is technical filter. I want the price to be greater than 20, because I don't want to trade in penny stocks. They don't have volumes, and I won't be able to get in and get out at the price. There won't be adequate liquidity, hence I am going for current price greater than 20. Simple. And what I'm looking for is I'm looking for price which are above 200-day moving average. Simple. Okay, above 200-day moving average. So I just had to give a value, so it is given greater than or equal to 5, at least 5 rupees above 200-day. Doesn't matter if 5 rupees or 1 rupees. All I want is the stock should be above 200-day moving average. Simple. The next one, this is the fundamental filter. like I said, right, the EPS change for the last quarter, it should be greater than 40%, and sales, it should be greater than 30%. Yeah, you can play with this number, you can try greater than 50%, greater than 30%, whatever. The idea is that you want to be in a growth based stock, so that's why this particular filter. You can try 35%, you can give 45%, go with it, play around, anything you can do. Okay, just just you have to make sure that you are in a growth based stock. Okay, only growth based stock will show this kind of move, not your ITZ or Reliance. Okay, they are not growth based stock anymore. They are like, I mean, they cannot move in this fashion, they cannot move 10 times in a year. Okay, they are saturated. So we need to look into new names which are growing now. Reliance was growing 20 years ago. Okay, and people had made this kind of money in Reliance back then, but now it is not possible in those kind of stocks, Reliance or ITC, you know. So that is on the fundamental part, that we want the growth based stock and this particular criteria. That's it guys, this is my one of the criterias. Okay, one of the stock selection method. So I have actually three kind of methods. So one is on the basis of earnings growth and sales growth, so which we are going to talk today. Okay, and other two we'll be talking next weekend. Okay, next weekend I'll be showing the second and further third method that I use. So now the first one, let's see, EPS growth. So we are going to apply filter and it will just list us the stocks. Yeah, and I think some 100 stocks it will list us. Yeah, it is listing us 188 stock that meets our criteria. Now all I'm going to do is I'm going to open the chart. Yeah, I'm going to open it in maybe full screen, and this is beautiful guys, this is what I love about MarketSmith. Okay, it shows me the chart, volume, everything, relative strength, and it shows me the numbers right on the left hand side. It's so simple, you know. I like, it's a great tool, it's a superb tool. So now here I'll be looking into the chart and I'll see if there is any base and then tightness. There was tightness but it's broken out, so it's no use for me anymore. I've missed it. We can go ahead, and on this one, Vishnu Chemicals, we are already in this trade, so no point. We have, okay, this is actually forming very good. So this is it's a VCP. So this is the first contraction, this is the second contraction, and this third contraction, it's really tight, and coming out of the base, it's coming out with good volumes. As you can see here, it's coming out with good volume, and it shows that there is some demand, and I really like this. And let's see, let's check the EPS and sales. EPS 151%, sales is 130%. See, consistently it is been growing triple digit, and you know what, triple digit earnings are really great. Those kind of stock just blast out. Okay, my god, this stock has seen some huge earnings, my god. Okay, so this has to go into our watch list, and we are going to add it. Jyoti Resins, JYOTHI, Jyoti Resins, where is it? Okay, we can just copy paste this one. No, we cannot. JYOTI, Jyoti Resins and Adhesives. Okay, so here what we are going to do is we are going to set the alert. Beautiful, that is beautiful. See, I had mentioned fourth base because I already had this stock somewhere, because as you see here, because the earnings were great in the, like, it was great, 134, 83, 223. Okay, and the stock grew at that time, the stock rose like anything. See, look at that, look at that. This is the period when the stock was giving you earnings, triple digit earnings, and still it is giving triple digit earnings. So we can further expect, still we can expect this kind of move. It will further go up, right? Look at this, that's a huge move from. So this is the first base, this is what I was talking about. Okay, as you can see here, VCP pattern, right? our entry could have been here. It just moves up anywhere. You could have gotten out anywhere. I don't mind. This is the second base. Again, we would have got entry here. Okay, we're just going to trade. Now this is the fourth base or third base. I don't know. Let's remove this. That's an old analysis. So here, as you can see, from yeah, I forgot to check that. From 253 2785. See, 10 times again. Like I told you. So this kind of stock go 10 times, 15 times. It's huge, guys. That's the power of trading on growth based stocks, growth based, momentum based. Okay, we just need to catch the momentum. So this is the tightness. So this first contraction, second contraction, and third contraction is above the breakout zone, and it is now contracting. I'm going to set an alert here. If it crosses up, it is going to alert me. Simple. Yeah, done. This is our first stock that we have selected for the next week. Now we'll move ahead, we'll check. So guys, 180 stocks are there. Just we have to do this quickly. Of course, I will not be recording entirely. Don't want to bore you with 180 stocks, but at least you can see how we can you know, do. So this particular, there was a tight range, low cheat entry here. We just went off like anything. Can't look at the earnings. My God, that's huge. Okay. No, there is a base, but there is no tightness of price. So tightness of price signify, with drop in volume would signify that there is no supply. So here, as you see, but no, yeah, this is, I don't like this price action. You see this huge volume, above average volume selling, above average volume selling. I don't like this. People are selling in this one. I'll just move ahead. No, this is choppy, sideways. This was a beautiful pattern. We could have traded around here, like, could have, yeah, we've missed it. I mean, it's a part of the game. Time can. Beautiful contraction over here. Beautiful contraction, just went up. Earnings, sales, beautiful. Okay, but no use for us now. Okay, I came back by mistake. Okay, stream current rate. I hope we are doing good. Okay. I think we were around here. Phenotex. No proper pattern for us, no setup. There is no setup here, so we need to find a setup now. That's the thing, technical setup. We have listed our stocks. Now we just need to find a stock which has a proper setup. This one we already have in our list. Yeah, from the last week's analysis, we already have this Lancer. Okay, and it's still setting up. It hasn't given broke out, so it's there already in the list. EID Parry, no. And this one is also in the list. No, this is not a good. This is choppy, too much for a sideway. This is choppy. Okay, I think this looks good. Base, this is a base. Okay, it also shows a kind of cup, I think. Okay, anyway, this is a good base, and after the base there is tightening of price at the top, where people who had bought here must have gotten out here, and there is no supply over this point. Okay, I don't see, like, price is really tight and it is not falling down. That means people are accumulating, and within the base I want to see good volumes. The larger volume, what kind of candle is the larger volume doing? It's a blue candle, blue or green, whatever. blue, I mean, it's a good candle, right? So yeah, so I think this is good. Relative strength is above 80. I like this. Let's add this. Indian hotels. Indian hotels. Okay, I'm adding this, but I still want it to. I don't know, I'm a little confused. No, I'm not going to add, because look at this volume. That's a huge volume, and it's a downward pressure candle, as you can see here, right? So definitely there is some supply. So we want to trade in stock where there is no supply. When the price tightens, there should be no supply, so that when breakout happens and even a little bit of demand will push the stock rocketing high. But at this one, as we can see that there is good bit of supply, there has been a good amount of selling here, so I think there is an overhead supply over here and it won't move as smoothly. So we are going to not concentrate on this one, we are going to remove it. Oh god, again I'm clicking the wrong places. Key industry. Yeah, okay. This is the key industry. There's nothing base, but not very tightening. I don't like this. No, no, no. No, I don't like this. Too choppy. It was good, but it has gone away. Can't help it. Wonderla. Oh god, it has rocketed like anything. It's gone. BLS. It's falling back down bad. This is too choppy. You don't want the stock to go up and down. So this is not exactly opposite of volatility contraction. There is no volatility contraction. There is a lot of volatility in this share, and we don't want to get in that kind of shares. Oh, this is choppy. Nope. No. This was beautiful over here. We could have entered at this breakout. Yeah, but we missed. See, there are so many stock we can only enter in. See the CG power. It comes in this screen, which I just showed you. Yeah. Anyways, moving on. It's already there in our list. It's already going up. Can't do anything on this. This is bad pattern. No, this is not good. This is Mirza Enterprises, beautiful VCP over here, but we are already in this trade. This trade is running for us actually, and we are in good profit. What about this? No, no. Oh guys, I'm looking for one trade, one setup which I'll mark, and I think I'll end the stream because I'm going to do this for quite some time, and I don't want you guys to be bored or anything. So just I'm trying to find one setup, and yeah, this is a good setup, but I already entered in this trade around this point, this breakout I have entered, and it's going well. That is there. And no, this is not good. Not good. Okay, this is some bit of contraction. TCPL packaging, but it has broken out. It has broken out, so not gonna work. Okay. What about this PG Electroplast? We already have this in the list. No pattern. No. Absolutely no. No. Okay. I like this. This is a base. Starting here, base, and this could be a, let's say it can be a tight area. So volatility has contracted over here. Look at the volume. The volumes are less now, meaning there is no supply at this point. And yeah, I think I like this. And I need to check this EPS and sales. 223.91. It's good. It's good. I like this. And yeah, let us add this one. Punchsheel Organics. Yeah, it's good, but I just want to see how big a fall this is. 30%. 30% fall is fine because I don't want to get into a stock which has fallen half, 50%. Because once the stock falls 50%, guys, the people who have bought stocks there, okay, they will never let that stock hit new highs because they just want to get out of the stock. It becomes a huge issue when the stocks fall, 50% or more. But up to 30% is fine because there would be overhead supply. People who had bought here have seen the stock fall 50%, and the stock has come back again to show them that okay, now you don't have any loss. And the people who bought here, see, they'll be so happy that their huge loss has turned into a cost to cost, and they'll be running out, and they'll be squaring their positions. And that's why this particular right hand side tightness develop the price, what do we say, that the handle or the cup, the handle develops because of that. Okay, so I like this. And see the volumes, look at the volumes, there's nothing. I mean, there's no supply coming in, literally nothing, no volume, meaning there is no supply over here. Once it breaks this with some demand, I think it has no supply, so it can smoothly, it can cruise easily, I guess. That is what my thought process is, and I'm going to add alert on this one. Yeah, when it crosses this, or at least this horizontal line pivot, when it crosses this pivot, I am going to try to enter. Okay, provided that I'm not in any other trades. Another contraction, if I want to show you, it is over here. First contraction, second contraction, third one really tight. So every subsequent contraction is a tighter one than the previous one, or the smaller. There's a big contraction, smaller contraction, literally very small contraction. The price is so tight now. There is no volume over here, there is no supply. And once even a little bit of supply comes in, this one, as you can see here, after that the stock really goes up. I think this is a good move. This must be around how much? 38%. 38% in 35. That's good. That's really good. Okay, so even if I get similar kind of move here, I'll be really happy. That's what I'm looking for. Yeah, so this process I'm going to do, and it'll take hours, and I just wanted to show you how I do my stock selection. There are few methods. This is one of the methods, and other methods I will reveal in the next week's video probably. Yeah, and that's it, guys. Hope you learned something from it. We'll see you. That's it. Goodbye.